Welcome to Tech Talks, the first word in insurance, a podcast by Hyper Exponential. Hi, I'm Tom Chamberlain, VP of Customer Consulting at Hyper Exponential, and your host, otherwise known as Tech. I'm delighted to welcome you to the latest episode of Tech Talks. In this episode, we're talking to Mike Hansen, who's Head of Aerospace at Convex. So let's get straight into it. Mike, to kick us off, it'll be great to get into, maybe take a little step back slightly and understand what it is we mean when we talk aviation insurance, as it's not just everything that flies, right? So would you mind just giving a brief overview of how we sort of view the different aviation classes and what they are?
Sure. There's really sort of four buckets we think about when we think about the aerospace industry from an insurance perspective, some which will be more familiar than others. So airline insurance is probably the most obvious because most people probably have been on an airline on holiday or business. So that would be scheduled or charter airlines of pretty much any size anywhere in the world. And we cover them for physical damage, so damage to the aircraft itself. And also we cover the liabilities the airlines have to the passengers and or any third parties who may be injured and any property damage that may be damaged in an accident. So that's the core airline hull and liability coverages that we talk about. Aside from that, it's become a much bigger issue in the last 15 or 16 months is a good old war insurance. And again, there is both physical damage war. So when an aircraft is damaged due to one of the perils that we provide the coverage for, or again, liability arising out of, say, a hijacking or terrorism incident. And I guess there's been some notable and sort of well-known incidents, and 9/11 obviously being the classic, where the aircraft were obviously hijacked and flown into the buildings. But subsequent to that, we've had a couple of other incidents that were covered under those coverages. So very tragically, there was a suicidal pilot on a Germanwings aircraft flying from Barcelona. And the sort of tragic and accidental shooting down of the Ukraine International aircraft over Tehran just as it was leaving. So those are the sort of exposures that we have on the war side. And obviously anything that gets damaged. There was a recent incident in Sudan when some aircraft got damaged at the airport during some militia fighting there. So it's a high risk, but generally quite high reward area of the business. And it's something that we have lent into since the invasion of Russia. The market contracted a bit. Coverage was quite restricted and rates went up. So it was a good opportunity we felt to engage there. So that's all around the airline side of things. In terms of sticking with aircraft, the other broader section, which is quite difficult to sort of put your arms around, is general aviation, which, as you know, covers a multitude of operations, everything literally from drones, balloons, through to sort of single helicopters, and then up to the larger corporate jets. And even the very large helicopter fleets that service the oil rigs, for instance. So that's a very, very broad spectrum of business. There's certain markets, ourselves included, who play in certain parts of that, but not all of it. Whereas on the airline side, typically you're either in or out of that segment. So that's the sort of aircraft side of things. And then from a liability perspective, we also cover the manufacturers, be they the OEMs, as we call them, the original equipment manufacturers. So that could be a Boeing or an Airbus, or one of the major engine manufacturers like General Electric or Rolls-Royce. And we effectively cover them for their product liability. So obviously they manufacture these products and the airlines operate them and assume that they're safe. And generally the aviation industry is incredibly safe. But should there be a manufacturing flaw that causes an accident, and that's the important bit, that has to be an occurrence, then the manufacturer could be held liable. And would be required to pay damages. And so we cover them for that. And I guess the most recent and most famous loss in that regard was the 737 MAX scenario where two aircraft crashed, the aircraft was grounded, and Boeing have been subject to litigation and paying damages to the descendants of the passengers. And within that sort of broader products world, we also cover service providers. So if you think about the infrastructure around aviation, so airports, they have a liability to passengers whilst they're on their premises, if they slip and fall or get injured. The air traffic controllers buy insurance for most parts of the world, other than the US really. And obviously there we're covering their liability should they cause an incident that results in an occurrence under the policy. So they obviously have a very large liability policy. And then there'll be the other service providers, so baggage handlers, refuelers, anyone who operates around an aircraft, catering companies, etc. And then sort of aligned to that as well is the repair and overhaul operation. So that they range from very, very large companies that service all the way up to full service on a major airline aircraft, through down to very small, almost mar and par shops, as we sort of call them, doing very small repair and overhaul. But obviously, again, if you touch an aircraft and something subsequently happens that was your fault, then you have a liability. So we provide them with coverage for that. So those are the three core, I guess, what people consider within the aviation world, and certainly we do. And then the fourth element, which again is a more sort of niche and restrictive market, is space, which again is it's a physical damage coverage. There is some space liability coverage, but it's not really that significant. But we cover effectively the damage should anything happen, either during the launch phase, which is certainly probably the most hazardous part of the whole operation.
The big bang.
Yes. So we sort of hold our breath for about 30 seconds and hope everything's okay. And we often joke it's the only form of insurance where we actually deliberately set fire to the thing we're insuring. So once we've counted to 30 seconds and everything's going smoothly, it's probably a bit longer than that, to be fair. We then cover typically an annual in-orbit phase. So depending on what the satellite is intended to be, whether it's a telecommunications or whether it's for Sky TV or whatever it might be, obviously they have an operating life and they're only useful up there, spinning around at thousands of kilometers an hour, if they're providing the service they're supposed to provide. So you do get anomalies, and as they get older, they have typically 12 to 15 years worth of fuel. And as they get older, then you tend to get some anomalies. So we would cover their non-performance out of that. But it's a very, very technical area of the business. And we actually employed to support our space lead space underwriter on that. We employed a satellite engineer, actually, who used to build small satellites, because we really felt we needed that technical knowledge, because that goes way beyond the sort of enthusiastic amateurs we get in the rest of the aviation market. And we think we know lots about how aircraft fly. So those are the four sort of main tenets of the aerospace business. And I think most people would have those buckets as the way they sort of segment the business.
Yeah, it's fascinating. I've always found sort of aviation insurance out of all the lines of business to be the most varied, right? You've got stuff up in the sky, stuff repairing stuff on the ground, coordinating stuff in the sky, all manner of things, and all the way to space, as you just said as well. It's a big thing, and each of those classes has very different risk profiles, very different sort of claims. It all tends to be high severity, particularly on the airline side, as you're saying. In space as well, it's it either goes bang or it doesn't, and that's the end of it. So it is quite difficult as well to really understand and sort of price, and particularly I would say more on the aerospace side, where you have complete variation in what your actual product's liability is, because you said, right, it's everything from real large aircraft manufacturers, which you go, okay, that makes a lot of sense, down to a company who's going to make a little tiny ball bearing that's going to go somewhere in an aircraft. But if that ball bearing can cause an aircraft to go down, you need the liability insurance against it. And I think there were actually claims in the market caused by ball bearings being found in places that they shouldn't be.
They shouldn't be. Yeah,
which is quite sort of scary. You've touched on quite a few points as well around what the market's sort of been happening over time, and my sort of experience goes back to the sort of 9/11 bit, where I think at that point there was a fairly seismic shift in rates in the aviation market, and all of a sudden, quite rightly as well, the rates became very high. But then we kind of saw, following that, sort of a very long, prolonged period of drop off. And I don't think anyone thought there was going to be a hard market again. It went on for 15 plus years, but then all of a sudden everything changed 5 years ago now, probably 2017-ish.
Yeah, 2017. I would think there was a shift. And I think that was driven by a couple of things, really. I mean, the basic one is the pure economics, money in, money out. And from an insurer's perspective, the money out was more than the money in. So markets either withdrew their capacity from the class because they just didn't see any prospect of an improving environment. Some of the regulators put quite a bit of pressure on certain areas of the business as well. And unless they felt they could achieve the sort of rate increases then they weren't going to get the support from their capital providers, or they would have other issues with the regulators. So very belatedly, we started to see the rates go up from 2017, 18, and 19. So we had 3 good years of positive rate movement across most of the classes of business. It's not 100% consistent, because whilst there is a relatively small number of insurers for the class of business, some have more appetite for one of those buckets than others. So it's not always uniform movement in rates, and the different dynamics play a part in that. But it wasn't a sort of violent reaction. So post 9/11, it was an immediate sort of very much a very short, sharp increase in rates. This was more gradual, which we felt was sensible, because that's much more sustainable. And the insureds can live with that, so that they appreciate that their costs needed to go up. And then of course came COVID, which sort of put a bit of a spanner in the works in early 2020, because the industry basically shut down. And whilst we've had shocks to the aviation industry over the last 20 years, and it's proven to be incredibly resilient, we've never had anything quite as sort of traumatic as a complete shutdown almost overnight. So, we've had 9/11, and obviously there was some concern whether the industry would come back from passenger confidence, etc. We've had SARS in the 90s. We also had other sort of respiratory diseases, which have caused problems, particularly in Asia. We had the Icelandic volcanic situation, which basically sort of rendered the North Atlantic unusable for about 4 or 5 days. But this was obviously something unprecedented. So as a market, we try to be pragmatic in those situations, and we accepted that this wasn't really a sort of isolated incident. The entire industry was in the same boat. So in fact, in 2020, the rates went up slightly higher because we just needed to maintain a premium base. And particularly on airlines, the premiums generated as a rate on the values of the aircraft, and a premium per passenger, to put it in its simplest terms. And obviously there wasn't any flying going on, and obviously no passengers flying. So we had to find a way to maintain a certain level of premium. So, and it's taken sort of 18 months to 2 years, and we're now sort of coming up to the big renewal season in Q4 for the airline business. And we're finally starting to see airlines at least at, if not slightly above, pre-COVID levels of exposure. So that's encouraging. And I think what also happened, we've had a good run, to be fair, in terms of major losses, touch wood. We still get what we call the sort of bumps and scrapes, attrition, which tend to fall to insurers rather than sort of impacting the reinsurance market. So it's been a good run of results, and capacity has started to come back. Appetite has started to return. So there's been a few new markets. I mean, ourselves being one, and Everest coming into the market, but it's more some of the more traditional markets regaining their appetite as they've seen a much healthier pricing environment. So we're now seeing a bit of pressure on rates, but fortunately, because of the way the business is rated, we're still seeing some premium growth. So we're still pretty positive going into Q4. But yeah, there's been some sort of seismic shocks, and I think actually the last 4 or 5 years, apart from COVID, which obviously nobody could see coming, it's been a relatively stable period of time from a pricing perspective. But there is still a lot of appetite around for the business.
Does that include then still the sort of the impacts of the Russia-Ukraine war as well? Because it's a bit of a tricky one, because it's planes effectively stranded and seized. So I don't know if anyone's really sure of what their sort of total exposure will, or even what the total claims will eventually be. And is that just a case it's not really being classed as a right, we've allowed for the losses already, or have you, or is it some element of it? Obviously you don't need to show exactly what Convex are doing, but I'm not quite sure how the market's reacted to that as a general overview.
Yeah, I mean, I'll have to be quite generalistic here, because there is, as everybody's probably read, an enormous amount of litigation flying around between the insurers and the market in several jurisdictions. There was obviously an immediate reaction to the war portfolio, and you can sort of deduce your own views on what people's view on the losses from that, perhaps. So that was both a very, very significant increase in war premiums and quite a tightening of coverage that the market was prepared to provide, because I don't think anyone in anyone's worst case scenario had dreamt up this situation where 500 aircraft were suddenly stranded overnight. So the war market definitely reacted. And I think at the moment it's a bit of a sort of wait and see, because there is uncertainty over coverage, where that coverage might be, what the quantum might be. whether there's any other mitigating actions that the lessors are able to take. And again, we can only comment on what we've seen in the press. So it's going to take a long time to unwind. And obviously even the litigation always takes time. And it's a bit frustrating for both the insureds and for us as insurers, really, because this sort of uncertain sort of dark cloud that's sitting there is not good for sort of building strong long-term relationships. So we're hoping that over the next 12 to 18 months, there might be some sort of form of resolution to some of these outstanding claims. But it is complicated, and I guess depending on whatever the quantum is of any sort of resolution to this, that could have an impact in the future. But at the moment, really, we've only seen it on the war prices and coverage at the moment.
That makes sense. And you said you're still confident going into Q4 for the airline side, so that's good news. I'd say I did see a couple of general aviation underwriters yesterday, and they were slightly less optimistic, shall we say, about the markets. And it seems that is already now people have come back in and started to boost their lines and take on more exposures. And there's basically talk that most of the sort of any sizable deal is now massively oversubscribed, and rates are actually starting to go the other way. So is that just? Do you think that's just a general aviation thing that we're seeing this softening now already, or is this going to expand into the rest of the aviation market as well?
Yeah, I think, as we said earlier, although it's airlines and general aviation are both aircraft that we're insuring. The dynamics are quite different, and actually some of the players are quite different in the two markets. And again, the other big thing, of course, is the limits. So typically an airline, physical damage of a new A350 or 787, like in $250 to $300 million just per aircraft. So it's a very, very significant amount of money. And they buy liability limits of upwards of 2 billion or more. So even with reinsurance, really a very large line on an airline would be 10 to 15%. And so there's a subscription market of 20 to 30 insurers that make up an airline placement just because of the size of the exposures. Whereas with general aviation, you're looking at much lower limits, typically, much lower values and much lower limits. And therefore, people are able to write larger lines. And in fact, in some parts of the world, in the US, for instance, it's quite common for one insurer to write 100% of relatively large general aviation business. And when you've got 7 or 8 markets all wanting to write 100%,
right.
Again, we come back to basic economics, right? There's supply and demand. In London, it's slightly different. There's less 100% writers, but typically where a large line on an airline or even a major products account would be 10 to 15, it's, again, not uncommon to be 25, 30, 50% lines. And so the scramble for business is more intense there. I think we have seen, even on the segment that we've engaged in, which is the sort of more the risk-managed offshore helicopter business, which we view as quite similar to an airline operation, and it's modern equipment, 2 pilots, effectively flying from A to B. We're not really involved in the broader general aviation segment, but we do see significant pressure on the rates there. We're not seeing it on the manufacturer side yet. That seems to be holding up and still relatively stable. And again, that's a very long tail class for us. That's the longest tail we have within aviation. And therefore, I think the capacity there is more restricted than it might be in the general aviation sector. So we're seeing a lot more stability there in terms of pricing. And again, the limits that the manufacturers buy are equivalent to what the airlines buy. For the obvious reasons.
And do we, because you mentioned a sort of few of the sort of big shocks to the system. 737 MAX was obviously a big thing, and initially this was it was Lion Air and Ethiopian. Those were the 2 airlines that had the problems with it. And this is a kind of, again, a quirk of the aviation industry, that you'll first get the claim on the airline, and sometimes that's where it stays, but actually quite often then it moves into the aerospace side, right? So 737 MAX issues are aerospace issues, not airline issues. It's not necessarily a fault of the airline that does that. So is that also the sort of long nature of the claims? Because obviously you see the immediacy in the airline itself when unfortunately a plane goes down, but then it takes many, many years for it to sort of filter back into where the aerospace, where probably it should actually be.
Yeah, I mean, every incident is different, obviously. I'm sort of leaving aside the MAX issues because obviously there's still litigation ongoing on that. But when we think about, internally, when we think about a large loss, so a major fatalities, a large aircraft, and and what the cost of that loss could be in the round, it's rare in history that only one party has been responsible or held responsible when the claim is eventually settled. So you're right. Initially, it would very much be the aircraft operator's policy would pay first the physical damage to the aircraft, and then they would have the immediate responsibility to work with the passengers' descendants. But as the investigation goes on, and obviously being a very highly technological business, and very sadly, when there is a major loss, the gathering all of the evidence to put together what's happened can be challenging because it could be spread over a very wide area, or it could have been significantly damaged in sort of post-crash fire. So that takes time. But as the investigation continues, and that can be 1, 2, 3 years, then other factors may come into it, and it may well be that there's an element of responsibility for the manufacturer, and not just the airframe. It could be an engine issue, or it could have been one part of the avionics, because obviously these effectively are flying computers these days.
Yeah.
So we're talking about how the major loss is rarely down to one individual party. There's typically 2 or 3, and that's what we've seen historically. And then so the claim itself is whatever the amount is, and that gets apportioned between the various parties dependent on their level of responsibility. I mean, one of the upsides in terms of sort of replaying what happened is a lot of the computer equipment on board an aircraft now, the data monitoring, the flight data recorder, that effectively can play back exactly what happened during the flight, and it can look at what one of 1,000 different components may have caused the issue. So it's a lot easier actually to perform those investigations now, because you can effectively replay exactly what happened. But as you quite rightly said earlier, the physical damage the aircraft destroyed, that's fairly easy. That would typically be paid in sort of 7 days. The liability element of that will take a lot longer. And it's not uncommon for an airline claim to sort of run 5 years. And if there is manufacturing or component manufacturers involved, again, we look at sort of 7 to 10 years as a sort of average tail until you finally get to a point where you're certain as to what the ultimate loss is. So, and that's obviously a challenge in terms of holding the reserves for that period of time, etc., from a company perspective.
Well, one thing I sort of noted about the industry as well, you sort of touched on a little bit there, is the safety aspect, right? You said it right at the start. But we're not trying to scare people here with traumatic airplanes going down, because occasionally they do, but it is occasional. The fact that we know about them is because they are big headline events, and that was always the way. If something goes down, then everyone's scrambling around to check whether who's on it and what's going on. But it does happen infrequently, and a lot of that is down to aviation safety. And unlike some other industries, aviation are very good at sharing all of the data, everything that goes on, in the interests of making the entire industry better. And I think that's fairly unique. Not many people want to necessarily be sharing all of their best practice stuff, but it makes a lot of sense, and it does make everything safer.
Absolutely. I mean, the investment in safety that really sort of took off, if I can use that pun, was sort of after 9/11, and that's when we've seen the newer generation of aircraft and engines. Engine failures are so rare these days. They really are incredibly rare. They're so reliable, the new generation engines, and obviously a lot more powerful. And we also have to think about the sustainability part of that. They're also significantly more efficient, so 50 to 60% more efficient than an engine from 20 years ago, and that's massive. Massive investment. So we have to applaud the industry as a whole for the investments they've made in safety, and again, that's all around the infrastructure as well. The maintenance. So it's they're safer aircraft, but also the whole infrastructure has become a lot safer. So yes, to your point, I would I wouldn't want any listeners to be overly concerned. It is an incredibly safe form of transport, and always hate to tempt fate, but effectively there hasn't been a fatal accident, for instance, in the US since 2009. And then in fact in one year, I think it was 2017, someone will probably correct me on this, it was 2017, there was actually no fatalities in a calendar year for the first time ever. It has got exponentially safer as the exposures have grown. So actually it's quite interesting when we're thinking about it from an insurance perspective, because it's completely counterintuitive to almost every other line of business.
Right.
There's almost always, and you're an actuary, so you'll know this, but there's almost always a correlation between an increase in exposure and an increase in claims. And Absolutely. It's actually been the opposite in aerospace. So I think we do have to applaud the industry for all the efforts they've made to improve the safety. And this is billions and billions of dollars that have been invested, which obviously is good for us from an insurer, but it's good for me as a passenger as well.
Yeah, exactly. That's my
and
first
I feel
and
very
foremost
safe
thoughts.
flying. Yeah, I feel very safe flying. So.
There were some interesting stats, and I can't remember where I was reading them, but following 9/11, where people just were really not keen on flying, particularly in the US, there was basically a massive drop off in people who wanted to fly, but then there was a huge increase in frequency of motor vehicle accidents and deaths. Mainly because people were like traveling sort of much longer distances than they would have normally, driving when they probably would have taken a plane before, and actually consequently like a lot more bad stuff happened. And that again is just down to the fact that it is so much safer to fly, right? You've got much more chance of being in an accident on the way to the airport than
Yes.
for the remaining flight. And it's but it never quite works like that in people's heads, because stats doesn't do that necessarily.
No, well, I remember when I first, exactly. I remember when I first started in the industry. I mean, it was common for there to be 20 to 25 fatal accidents, aircraft accidents with fatalities in a calendar year, and that's going back, unfortunately, 40 years. But in the last 10 to 15 years, it's much more like single digits, and some years low single digit fatal accidents from Western built airline equipment. So that is a massive change. And you're absolutely right. And it's quite interesting you talk about the US, because it's a very different dynamic to other parts of the world, in that the volume of passengers in the US is about 40 to 50% of all passenger traffic is in the US alone. And again, slightly uniquely, for the major US carriers, international traffic is only about 20% of their total operations. The vast majority of it is domestic. So actually they recovered very quickly post-COVID, because people were quite happy to fly domestically, but obviously a lot of the international routes weren't open. And whilst that was affecting all of the major carriers in Europe and Asia who rely on the long haul, the US domestic traffic was actually back above COVID levels quite quickly. So if you take all of that passenger traffic out and put it on the roads, you can absolutely see why that would cause potentially an uptick in accidents there. So, but in the US, for many people, I mean, you've been through US airports. I mean, have you ever been through one when it's not busy? It's incredible, the volume of people traveling. And for a lot of this, it's almost like a bus service. We would consider it a bus or a train in the US because of the size they fly.
Yeah, they have to do that. Yeah.
Yeah.
I absolutely am never flying via Miami ever again. I've had horrible experiences of their 7-hour queues. It gives me the shivers. You mentioned there a really important word is around sustainability, right? The air traffic is, the aircraft have become much more sustainable, and you said massive improvements in efficiencies, but there's still some way to go, right? It is still a very high emission area. I think there was just recently in France, they've banned some regional flights where you can take the train, or something like 2 hour. If it's a 2-hour journey, then there should not be a regional flight. And obviously there is a sort of move to try and find more sustainable efforts. I mean, how likely is it that we're going to be able to replace like a lot of this technology? Because electric cars are coming, we're seeing eVTOL stuff going on, and for short journeys that perhaps makes sense, but how on earth, and is it even in the realms of possibility that we move to a stage where wider aviation becomes really sustainable?
Yeah, I think there's a number of topics, and it's something we're very engaged in with the industry, to the extent that we've been on industry panels on a couple of occasions, talking about how we see the sustainability of the business, and for us it's very much an educational exercise, because we're learning almost at the same pace as the industry. But I think we touched on it earlier. I think we have to take a step back. The investment that the aerospace industry has made in safety has actually had a sort of unexpected knock-on effect on the improvement in emissions, because the engines are so much more efficient and are a lot greener than they were 25 years ago. But that doesn't change the fact that clearly it is a high emission industry, albeit it represents around 2% of all global emissions currently. The challenge for the industry, as other industries get more efficient and create less emissions, the potential for aerospace's percentage of that is to go up, is obviously the risk, unless they can move at the same pace as other. And it's a lot easier electric cars are much easier than building an electric aircraft. So I think it is conceivable. There's a couple of obstacles. So sustainable aviation fuel, which is made from sort of agricultural byproducts, food products, etc., is absolutely, it's being used already today. So most aircraft are flying with some level of SAF, as it's called in the industry, in the mix of the fuel. So that is perfectly conceivable. It doesn't have an issue with the propulsion systems because they obviously were built to run on standard fuel. So that's proven. The issue is producing it at scale and at a cost that is feasible. And at the moment, there's about enough SAF in the world being produced at the moment to service about 3% of the world's flights. So, and it may take another 10 years to get up to 20 or 30%. And so, yeah, that's the challenge, is how can they create enough SAF, whether it's from on a synthetic basis or whether it's from agricultural byproducts. And obviously you can't ignore, in any manufacturing process, you're creating emissions. So, it's never, the zero is always a big challenge. So that's conceivable. And I think the airlines are pushing that hard, and the regulators are now starting to impose greater requirements for SAF within the mix. So that's definitely feasible. A number of the manufacturers are also looking into hydrogen, which again would be as clean as you can get. But again, that would take a lot more change to the actual industry and the way that the aircraft are built and are powered. So that's a longer term concept. But Airbus in particular are very sort of vocal about their mission to move in that direction, which I think is great. And then, as you said, on the smaller scale, you'd have the electric aircraft or eVTOLs, which could and should sort of start replacing a lot of the short journeys. And actually, if you also think about drones, for instance, I mean, Amazon have been talking about this for a while. How much traffic on the road these days is delivery vans, right? Because we've all got so used to ordering everything online. And that could easily be replaced over time. You can certainly see a world where a lot of more of that delivery, even if it's between Amazon depots, could be done by the larger drones, for instance. There's a lot of challenges around the actual concept of building the aircraft. I don't think that's a challenge. That's happening. There's lots of manufacturers out there. They're starting to get certificated by the authorities. So that is more than a dream. I think that's a reality. Probably 2 to 3 years away before we start seeing sort of meaningful activity. The challenge is going to be the regulation around that and where they can operate. Because we can all have this sort of sci-fi image of these little electric taxis buzzing around all over the place. But even on the road, there's rules, right, about where you can and can't go, which side of the road you have to drive on, etc. So they're going to have to create that infrastructure that sits below the current airspace infrastructure. And as you know, around London, it's one of the busiest airspaces in the world. And so logistically, that's a challenge to manage that. So then you throw in eVTOLs operating at sort of obviously at a lower level. That needs to be considered. But we know the FAA in the States, the CAA in the UK, EASA, they're all working very closely together. And I think what we're seeing there actually, and you go back to your point about the sharing of safety data. Again, this is a good example of the whole industry working together because they know that this is a great opportunity, and there's been something like 20 billion invested in the industry already, and aircraft won't be flying for another 2 or 3 years. So that's the sort of investment the industry is making. But we can definitely see a world where that's going to happen. And I think that the industry's demonstrated over time that there's some incredibly clever people in it, and the investment they make in these technologies will pay off. It's just going to, unfortunately, will be a longer haul perhaps than anybody would like. And from our perspective is, for us, it's about supporting the transition. But we don't have all the answers, and the insurance product sits alongside it, but we want to help with that transition. So definitely we would encourage any of the airlines and manufacturers who are sort of moving that direction. And our expectation is that, all of our stakeholders, be they our employees, our investors, our reinsurers, regulators, are going to be looking much closer at the business that an insurer writes. From a sustainability perspective. So it's almost going to become as important as our security rating. So it's something we're very, very engaged in at Convex overall, and certainly within those industries that are certainly more in the spotlight, and aerospace definitely being one. We want to work with the industry to see how we can assist with that transition.
Yeah, absolutely. This is a good example of insurance as an enabler. Regulation takes a while to catch up, and insurance is there to help plug some risk gaps. And obviously, quite rightly, regulation does take a while, but for a very good reason, and that goes back to the safety side of things. They want to make sure that everything is working. But I think it's going to be a while before we see sort of drone taxis buzzing around London and stuff. But there's plenty of use cases where actually it is in sort of better areas. Rig to rig transports and shorter rig transports, there's no reason why you need helicopters for that, right? Those sort of level of journeys are perfectly doable now with well, not just passenger drones, eVTOL, whatever it might be. And you can imagine sort of corridors being set up so that to allow for that type of thing. Drone deliveries, again, yes, we're not going to see Amazon drones things going about, like, but they've got it right. They know they can do it. They've done some test cases, I think over in Asia, where they were doing some deliveries to very remote locations. I know there's sort of medical supplies being delivered across Africa using drones. So again, where the airspace is less used and is definitely less busy and basically the most important thing, not over conurbations, then it's already there. But I do look forward to the time when I can land at JFK and hop in a drone and be in the city in a couple of minutes. That would be quite wonderful.
Well, and the other thing that drones have been used for, which is again, I think a good example of insurance being an enabler, is in loss adjustment. So particularly in the US or other parts of the world where they have catastrophic floods following storms, it's obviously not possible to get adjusters into those areas because it's not safe or it's inaccessible very quickly. And until the adjusters can get in there, then obviously the claims can't be settled. So we've seen over the last 4 or 5 years, drones being used really extensively to go and actually sort of map the area that's been affected. And then they've got the data in real time. The adjusters can make their assessment of the damage and the claims can be paid much quicker. So I think that's a real step in the right direction. And that's another area where perhaps people hadn't considered where drones could be of use. And we also see them doing a lot of work, and you touched on the helicopter thing. We see drones doing a lot of work that helicopters used to do. So if you think about particularly in parts of Canada where I used to live, a lot of the mining and seismic work that they used to do by helicopter flying up and down in a straight line that can all be done by a drone, which is more efficient and obviously much more sustainable. So
absolutely,
there's lots of uses around.
Wind turbine inspections. They've been doing it on rigs as well to look at the underside of the rigs, and rather than sending a poor chap underneath with like attached to some line, you can send that under and then actually send the people when you need them. And same for wind turbine things, which again were done with helicopters before. And,
and you're getting the data in real time as well. That's the amazing. You're getting absolutely real time data as well.
No, that's really cool. It's good to see how the aviation industry is helping out across the board across insurance. One more kind of topic slightly off what we've been talking about. More on the actual writing of insurance as well. I want to bring this up because it's really cool what you've done over in Convex and changing the way we actually write insurance in this area, right? Where aviation has been a very much a broker running about London with huge slipcases, knocking on doors, going and visiting clients, and good to have face-to-face contact, but still paper and pen and an old-fashioned walking about the city. But that's definitely not sustainable, and COVID sort of sorted that out a little bit. But you've got a really good setup now in terms of how you write the insurance, right? Can you just explain a little bit about how that works? Because I'm always super impressed when I hear this.
Yeah, so there's a couple of things really. I think the face-to-face or on the phone, the negotiation between the broker and the underwriter, I don't think that would ever, nobody really wants that to go away at all, because I think that is a key tenet, particularly what makes London special. And as what has sustained London as a market over many years. And that's not just aviation insurance, that's across all lines of insurance. I don't think that part of the negotiation should go away. The client needs to have their advocate, and the broker is their advocate, and the insurers need to have their part in that negotiation. But what we're trying to do is eliminate as much of what we call the sort of background noise that goes on around it, the process. So the transmission of data from the client to the broker to us, what we do with that data, and then how we communicate back the actual core parts of the offering. And to us, that is something we can take the human out of that whole chain. And even at Convex, when we started, because we didn't have any systems set up, it was very entrepreneurial. We were actually in a WeWork office, so we were sort of surrounded by software gurus, and then we were a boring old insurance company. And we didn't have any systems at all. So at the time, we realized at best, we were touching the same data point about 5 or 6 times. And in the utopia, we want that to get that down to 0. So what we've been able to do, and thanks to commitment from a couple of our major brokers, actually, we now absorb 70% of our airline data via a robot, effectively. So one uses one of their online portals, another one is currently using an email but that's going to move on to an online portal as well. So effectively, as long as the data is in a structured format, and it works really well for airlines because the data on an airline is the same every time. It's, it's the fleet, it's the passengers, it's the departures, etc. So we built a structured template which they now use, and then we use RPA, so they can then scope 3 or 4 times a day. It finds something that fits the model, and it sucks it into our system, and then lets us know that the data's there. And then we're sort of working quite closely with another couple of brokers on how we can sort of automate some of the actual underwriting process behind the scenes. And actually this week within Convex, we've just launched a second phase of our sort of data acquisition mission, where we can now have a sort of a piece of software that will read a slip and extract the key points of data and basically populate our submission system automatically. So again, we're sort of removing so much more of that data. And the advantages of that, of course, are one, time is hugely saved. Accuracy obviously goes up massively. And it then allows us to spend the time, the intellectual power that we have to actually think about the risk and have those meaningful negotiations with the brokers. And there's sort of a tenet that sort of goes around that company that we'll have to always think about is, if it doesn't need human knowledge or expertise, then you either automate it, you outsource it, or you don't do it. So, and that's very much, when we're thinking about all of our processes, that's the thing that's sitting behind it, is like, how can we get away from touching that data unless it needs that sort of human expertise? So it's really exciting actually, and obviously having a company with a clean sheet of paper, but also from the top down, from our, Paul Brand, the group CEO, having the vision to say, no, this, and the discipline to say, this is what we're going to do. Because when you get busy, and we've gone from 0 to 4 billion in 4 years, there's quite a lot going on. It's very easy to fall back on the old ways of doing things because that's easy and comfortable. And everybody here is really focused on challenging that and not letting themselves drift back into the old ways of doing it. And sometimes it's difficult because you're busy and you just want things done. But we're starting to see real benefits now, 4 years of investment in time and money in the concept. And these things were, even 4 years ago, I wouldn't have been able to assume we could do this. I've shown you briefly just on the laptop a quick example. And we know from talking to some of our other partners and the brokers that we appear to be quite a long way ahead of our competitors, but we don't want to stop there. We want to keep thinking of ways that we can continuously improve that, because we feel the value is not in the data itself. The data is data, right? It's stuff, as someone described it to me. It's what you do with it. That's the clever bit. That's the competitive advantage.
It's the decisions. It's the decisions you make from it.
So the data should exist for everybody. What each individual insurance company does with that data or broker, that's the competitive advantage. But we shouldn't be spending time and expensive salaries on people sort of wrestling with that and actually just creating friction in the whole process. So that's very much a strong vision of Convex, as you know. And we're starting to see real benefits of that and actually real output. So once people start seeing that progress and their lives becoming easier, then you get even more buy-in and engagement. And I think we're seeing that very much now.
And as you said, it gives you that edge. And that kind of neatly brings me on to my sort of last question, really, which it's you've kind of answered it a little bit, but maybe touch on one or two of the points again. But obviously, a soft market is inevitable. Sadly, although some people have said it's not inevitable, we should hope that it's not, but it kind of is, and we're already seeing it on the sort of GA side, and hopefully, airlines and aerospace will take a little bit longer before they start heading that direction. But what's the kind of main thing that you would sort of be saying to companies, saying, well, how should you be preparing for this, right? We know it's coming. What's going to be the sort of most useful thing you can do to set yourself up for this inevitability?
Yeah, I mean, the market operates in cycles, right? And it's an incredibly efficient market because it just follows supply and demand. And we've lived through longer soft markets than hard markets. They tend to be longer and more sustained, and hard markets tend to be shorter and unfortunately less sustainable. I think the key is one of the keys is being as efficient as possible as a company, and obviously one of the big things there is that the expense ratio, maintaining that as low as possible, so that obviously that's a big cost for us. Salaries are a big cost for us, but if we can manage those costs that we can directly control, then, our biggest cost is claims. So that is inevitable. And, if the premium base is shrinking, clearly that is going to have an impact on our margins. But, we can control what we can control. We can hopefully trade through the softer parts of the market more effectively. And again, I think it then comes down to the underwriting discipline. I mean, we all have to know, nobody likes to say no and decline business, but there is a point where things become uneconomic. And what we try to do is think about, certainly in our aerospace portfolio, we try to think about it as a portfolio over a cycle, and not sort of get hung up on too much on individual risks and where they sit in the sort of pricing spectrum, because that's probably too granular. I mean, each individual risk should contribute something towards the positive result, but we do have to think about it as a portfolio. And within that, we have what we call core and sort of more opportunistic business. And so inevitably, you'd expect the more opportunistic business to be the ones that we probably would decline if the pricing isn't at a sufficient level. And we will try and support our core clients, because that's what we sold, is our long-term commitment. Obviously not at any price. But frankly, if the business becomes that uneconomical, then everybody's going to have the same problem, and
exactly.
You'd actually get an uptick. So and again, the key there is, how do we differentiate ourselves in those scenarios? Is again the service levels which we try to deliver and maintain, making ourselves more useful to our clients, so that in the tougher times they want to be stickier with Convex, and that might be working with them on other lines of business. But just generally being a sort of strong long-term supporter of them, and hopefully that will stand us in good stead. But as you say, we can't push back the tide. If it's a soft market, it's a soft market. We just have to find a way to navigate through that with good underwriting discipline and sort of maintaining an efficient process.
Yeah, I couldn't agree more with that. Makes absolute sense. Yeah. Mike, that's been brilliant. I'm very much looking forward to seeing where the aviation industry heads. I hope we haven't put anyone off going flying. It is definitely the safest mode of transport, and I do look forward to the day that I can take my passenger drone to work. But
yes,
maybe 2 or 3 years or plus a little bit more before that happens. But yeah, thank you very much.
No, appreciate it. Thanks for the time.
Cool. That concludes another episode of Tech Talks. If you enjoyed today's show and want to find out more about the topics discussed, head over to hyperexponential.com to gain access to a range of resources relating to this episode. The link is in the description, and of course, wherever you're listening to the podcast, make sure you like, subscribe, and leave us a comment or review. Thanks so much for joining us, and see you next time. Bye!